Here's the super simple way to sell an iron condor inside Interactive Brokers. First, pick the company you want to sell the iron condor on. We're going to get paid to do this, remember, because we're selling the option here. I'm going to use the SPY or the SPY S&P 500 because it is one of the biggest traded companies and index funds out there. Lots of liquidity here. And I like to go about 30 to 45 days out in expiration. So I'm going to pick the 20th of October. That is the monthly expiration right there for October. And then I'm going to pop open this option chain so you can see things nice and clearly. Next, put on the strategy builder at the bottom left-hand corner. Because this is a multi-leg trade, you're going to be buying and selling a call, buying and selling a put. And here's how you sell an iron condor to get paid cash when you have the puts and calls in either side here. Current price of the SPY, 447.80. We're going to venture a guess that it's not going to drop below, let's call it 430 here by October 20th. So we're going to go ahead and this is going to be our baseline area for selling our put. Now, if we were just to sell this put, we get paid $219, but we'd be on the hook for potentially buying 100 shares of stock at 430. We don't want to do that. We want to protect our downside risk. We do this by buying this call option at 425 or anything below that 430 strike price for the put. As long as we're below that, we are capping our downside loss potential, and we won't have to buy the shares and hold them in our account for very long. We're going to be able to go ahead and do this at 425. And right now you can see down here in our strategy builder, if I fill this in right now, we've got a bid ask for the two of them there, the sell and the buy. And we've got right around $50 worth of credit coming to our account right here. If I would put this in, be right around $50, and we get paying a credit of $50 to do this. But we have to add the other side of our iron condor. Right now, we're showing just a bull put, which is a credit spread, getting paid to do that. We want to add on the other side on the call side. And notice I picked this 430 for a reason, because the delta is really low. It's below 20. So there's a 20% chance roughly of the stock getting down to 430, which is a pretty good odds. I'll take an 80% chance in my books at the current time. Let's hop over to the call side here and look for the same kind of delta over here. This is why delta is so important to have on. You can see the kind of information and filter it very quickly when you're doing this. I see the delta down here at 2 through 460, 463. We have a 468. We do. Okay, let's go through this and let's just see bid size. Okay, open interest. Where's open interest? Not bad, not bad. I'm going to go to 463 right there. And we're going to go ahead and do the sell here. And I'm going to go about $5 off here at 468 to buy. Doing the same thing we did on the call side, right? We have this first option that we're selling, and then one subsequently a little bit lower, further out of the money that we're buying to cover our downside risk. In this case, we'd have to be able to sell 100 shares of the SPY at 463. But because we have this call on that we bought, we could turn around and buy shares for 468 to sell them at 463, therefore capping our downside loss with the iron condor. It is in there right there, iron condor. You see it live. We're going to update the credit here to 130, let's say, limit price down here, 130. We're getting paid 130. If we go to advanced, you're going to see the nice margin impacts and the different kind of portfolio impacts in here. The main thing to remember, you want this number, this change number, to be going up. It's going to show your margin impact as well. But if this is going up and you got the C there, even if it shows negative here, you're getting paid to do this. You're going to be getting paid a credit. It is an iron condor. When you're selling the iron condor, you're getting paid this credit. This will be going into your account as well once you transmit this order. And then again, remember that if you have the options in here, you have to watch the 430 level. If the price goes below that, you could be in trouble. You have to take kind of a loss on the trade. If it goes above this 463 area by the October 20th, you would again be taking or flirting with your maximum potential loss. And if it goes past 468, definitely having a max loss. Going above or below 425, also a max loss. You don't really want it to end up in between these two. That's a really big problem. And to understand what happens and how to get out of it, if you end up in that scenario, either between 463 and 468 or 430 and 425, make sure you like this video and check this one out right here to protect your downside risk.